I mean, it's like really. I mean, it's like 101.
All right, we're
Yeah,
live.
yeah.
We're live, boys. Welcome to episode 147 of the Lumber Word. It's the 19th of November, 2025. We are joined by a reoccurring guest and a sponsor of our show, Matt Lehman. Matt, welcome back.
Glad to be aboard.
That's all.
So
Sure.
if you're an advertiser on the pod, I mean, you get like, I mean, this is one way that you get some airtime. Is that it?
Yeah, I like the cameos rather than the full deal, though.
Yeah.
Not the say something cute pop out.
Right. Charles is joining us from his shisha. And
I mean, that's a baller spot you got out there, man.
It's pretty
I appreciate it. It's not done yet.
I mean, the only problem with that is it's at some point, the boss may just like relegate, hey, you can just stay out there for good.
I doubt that. I'm too useful inside the house, Greg.
Oh, okay.
Right now,
Yeah.
so
if you say so.
So Beamer will be joining us in a bit. I hope so. I thought of some title picks
Allegedly.
I thought of some title picks for this while we were getting ready. I don't know what the first one means, but fatigue, fear, and the great curtailment no-show. Apathy in aisle 4, lumber traders running on fumes. Recession clouds, no curtailment and hope on life support. Still no cuts, ? Welcome to the lumber twilight zone. Blood in the streets or bounce in Q1. The market can't decide. The great standstill. Everyone's tired, no one's buying. Repair and remodel rollover, but hope refuses to die. Curtailments missing in action. Why traders feel that they're losing their minds. And the lumber funk. Apathy, anxiety, and the waiting game. That's similar to Fear and Loathing in Las Vegas.
Were those all AI? Did you get those? Did Claude give you those AI generated?
I didn't use Claude on those. I used another, but everybody's like it's all AI now. It's all ball bearings. It's although somebody said don't give email replies using AI anymore because everybody knows. I'm like, okay, whatever.
Is it like the same as when the email says sent from my iPhone?
It could be. It could be. So
hey, change that right away. Don't do that.
So first, I want to jump in, Matt. What's new?
100%, Greg.
What's new over at Layman's Lumber Guy? What are you doing? What's going on? What are people thinking?
I'm having my third late life mid-career crisis, and I'm really going to get much more into forecasting and get away from current market conditions. Simply because that space is getting kind of full, and nobody wants to take a chance. But I figure I don't have a lot of years left to live, so I might as well go. If I'm going to go for it now.
Go big or go home, Matt. Go big or go home.
Right.
So that's kind of the big shift, and really this week's kind of our first start. I think I showed you that piece that I sent you showed some stuff about what's going to be in today's forecast, and it kind of breaks the market down into four pillars, which are repeating human behavior and market cycles, which include production, demand, and preparation. And the whole market moves on the preparation cycle, people preparing for what either production is going to be or not, but mostly about demand. But right now, I think we're in a real rare spot where the market is. It's waiting for the big foot of production cuts to fall.
I always look at, Matt, like one of my things is the biggest market moves come when reality is different than what people's, perception of what reality was going to be. And, that's where I'm in this conundrum right now in that, as Ashley said, we've been waiting for months now to have production curtailments have any impact on price. And now we're getting news of negative demand that we kind of felt was there because the prices were telling us. But, when Home Depot comes in and says, hey, repair and remodeling's down. We've been saying R&R has been flat all year, and now apparently it's not. Apparently it's down. Are we going to wake up post government shutdown and find out instead of running at 1,000,003 housing starts that we're running at, 1,001,000, 1,002,000?
Well, Greg, the Home Depot, kind of looking at that, they're still going to eke out some positive growth for 25, but it seems like the analysts, if I'm reading it right, pulled back on their predictions for 2026 with slight growth, but margin compression. Does that make sense, or were they actually down?
Yeah, it got down about 5% from where they had originally forecasted.
Yeah. So is that technically flat, or how do you look at that?
Technically flat, but trending lower.
Yeah. Okay.
And I think the big takeaway from that comment and the stock market getting a little slap in the face, like Mike Tyson's got a piece of it, and Bitcoin
taking the head.
Yeah, but it feels like the entire economic sector of the market, the lumber sector and housing, basically everybody's getting confirmation that things aren't worth the crap, that things are worse than they pretended to be. And I don't think they're worse than what we really realize or feel them to be. But what the story is it's now kind of validating what, like you just said, Greg, it's like what we've been saying for the last 6 months.
And I mean, back to this, we've been talking about, mills are going to have to curtail. And obviously there's been some curtailment, but certainly nowhere near as much as, the market demand would indicate is necessary. I guys continue to be shocked at mills' ability, and in particular in Canadian mills, and to a lesser extent, I guess, Southern producers, ability to continue to fund losses.
And their stockholders, it's their stockholders that are eating it. Well, I mean, they're the guys paying the bills.
So the big question that I have going forward is cash. People are running low on cash, and so what does that mean for building log decks if you're in the Pacific Northwest or you're in Canada, and then the flip side of that is when you look at some of these companies that are down to like nominal market cap, but $7, $8, $9 $1 billion. Are banks going to finance additional losses to keep cash flow coming?
Well, look at Charles and I had a conversation 3 or 4 weeks ago about looking at Mill's balance sheet and by the stock price, what they're actually worth, right? And it's pretty scary, right? Like how many people want to own a mill right now?
Probably half the ones that do.
Yeah. Yeah. So Greg, when I walked in your office the other day, Greg, or this morning, you said, are banks going to keep, what's the conversation at the C-suite at the mills and what's going on at the banks? Are they deciding, hey, we just got to keep throwing money at this? Or at what point?
What would you say, Ash, if you were the banker?
There's that thing that what did Trump always say? Like, if you owe $1 million, the bank owns you, but if you owe 300 or 400 million or $1 billion, you own the bank. I mean,
that sounds like a guy that was deeper and deeper in the hole.
Well, what I'm saying is, I don't know what a bank says because they've been continuing. I think there was still hope, but in the last week or two, I can just feel everything changed, and the shit moment happened, and I think it's happening everywhere.
Well, I think part of that is driven by, like we were just saying, is we've been saying repair and remodeling is kind of okay, and housing starts are flat demands. But Westbury was on Fox Business this morning, and hey, we may very well, the U.S. may very well be rolling over into a recession. Employment growth is negative right now. the spigot of free money, like FU free money, appears to be coming to an end.
Net immigration is zero right now, right?
We're gonna lose people this year. It's gonna be the first year on like recorded history that we ever go negative in population. So it's hard for the economy to grow. The economy only grows two ways over time: more people or more productive people. So the dream of AI making everyone more productive. Is it going to make everyone more productive, or is it going to make it's going to make the people that still have jobs more productive? But arguably, it's apparently going to put a lot of people out of work.
So you think it's going to make the cost of that productivity go up too? I mean, you got to pay bigger wages to the guys sticking around for those jobs.
We've got, we've all talked about it. Interest rates are too high. There's no two ways about it. But the Fed has a 2% inflation. It's running, 2.8 or 3%. That's kind of really sticky here. I mean, as you continue to lose labor with a net negative immigration, the people that are left, probably can command a little bit more money, right? So this is.
I just had a thought when you said interest rates are too high. What are interest rates too high for? And basically, it's housing.
No, it's business investment too.
But
the whole cost of actually generating an ROI, that burden has increased by 30% based on the cost of capital.
For those people that need to borrow, yeah.
Well,
and that you have.
It's not necessarily needing to borrow.
I'm sorry. I want to just share this with everyone because I'm very guilty of this. My wife came to me the other day and said, "I have a great podcast for you to listen to. It's about being a better listener and not interrupting people." And I go, "What? I'm not."
That's not me. You're talking to the wrong person.
There's no way I'm going to listen to that.
Yeah. But no, it's not. I mean, it's not about needing to borrow. It's about leverage, right? I mean, and replacing people or not having people fill butts and seats or positions on a manufacturing floor, you've got to have capital investment in order to keep up with the times, right? So in order to lower cost per unit production costs, I mean, these are things that naturally in business are necessities, whether you can write a check for it or use leverage from the bank to do it. 9 times out of 10, other people's money makes more sense because you have leverage at that point and you can increase your profitability. But the problem is, from a business standpoint, there's zero direction. We don't know what's going to happen in 6 months, right? There's no way to sit here and say, hey, I have a goal to get from A to B, and I've created a roadmap to do that. And I know the partnerships and the relationships and what I have to do in order to accomplish that. Well, hell, in 2 weeks, the variables that you can't control could be completely flipped on their head, and then you're ass out and you're starting over again. And I feel like that's happened so many times over the past 4 years in various industries that people are they're gun shy on CapEx or increasing any type of business investment that's needed to garner that growth or increase the employment level, honestly. But
so does that mean that interest rates have a bearing on that, or does it matter because it's a kind of a lack of confidence issue that even
it's a double-edged sword, right? I mean, if you had, those are two variables that are very black and white, right? I mean, you either have direction or you don't, and you either have cheap money or you don't. Obviously, one without the other, you can mitigate some of those risks, right? There's ways to play off of the negative part of that equation. But, given how things have gone over the past 3 years, just in this country in general, right, with the free money and the people not wanting to work and all the things, it makes it very difficult as a business person to want to make tough decisions or invest in other people, Yeah.
And my point there, Charles, was if you're talking about a difference between 5% money and 8% money for me to operate a business, if that's how thin my ratio is, my margin is,
You don't need to do it. I agree.
it's not a good business. So my point is, I mean, interest rates are going to help, but it's going to help the bottom end of those people that are maybe, SBA loans or small people. You don't walk into a bank anymore and tell somebody you got a good idea and you want to borrow $50,000. They show you the door real quick.
No, you tell your friends that and they loan it to you.
Yeah, I'd be more likely to.
Next time I need 50 grand, I know who I'm calling. Actually.
Well, so my question.
I mean, back to like the question. I say interest rates are too high. If you look at a real historical, like a real rate of interest being inflation plus something, a half to 1 percentage point, then if you look at that, then you go, well, then maybe interest rates are where they should be. If we have 2.8% inflation. But I think where we're at right now is a place where, instead of being restrictive, we need to be stimulative in terms of monetary policy. One of the things that drove us, back in the 2010 to the 20 teens was we kind of had negative real interest rates, right? I mean, what kept things going was interest rates were lower than inflation. And then we got into the whole deal where, the Fed was quantitative easing. They were buying up mortgages, right? And I said this last week, the best thing that we could do for housing right now is the Fed go ahead and say, yeah, we're going to start buying, $50 billion a month or whatever the number of mortgages. And then they drive that spread down from, right now, you think about it, the 10-year is 4.1, long-term average, the 30-year mortgage trades about 1% to 1.5% above that. Well, that would be 5 to 5.5, and it's really trading at 6.25, I think, today. So you could lower mortgage rates by 1 percentage point without even trying that hard. And if you lowered them by 2 percentage points, I think that would go a long way to helping revive housing, and in particular, like free up all those people that are locked into a cheap mortgage that aren't doing anything. And, probably, might like to, but they're saying, hey, I don't want to trade my 3% mortgage for a 6%, but maybe they would trade it for, a 4.5.
In that scenario, the home buyer is the one that has to always eat it. So what if the home builders had to eat it, and we'd be willing to pay 7% interest for a $500,000 home rather than a $700,000 home? That's the same thing.
Well, interesting article was in the Journal. I'm going to say it was over the weekend about how, the big builders' ability to buy down mortgages, which they have. I mean, in selected communities, Lennar, D.R. Horton are, giving 4% 1 year, and 1 year, and then it goes up to goes up to like maybe 5% after 3 years. But the impact on that is that it artificially keeps the price of the homes higher, right? So
maybe that. So that's the intention, right?
Yeah.
for
that. When they go to the bean counters, get a hold of it, it doesn't show that way, and what they have to call for P&L doesn't show that way. But the community value stays up, so people still feel good about where they're.
Right, because the last thing you want to do is be building a community, and all of a sudden, like the half of it's sold, and you're selling $100,000 below. Everybody's underwater by $100,000. That nobody wants that.
Well, that's why they sell them to the build to rent people, because nobody ever sees that transaction.
Yeah, I mean, I think the biggest trend you see in that right now is they're offloading their odd lot homes and trying to buy the entire community to lower their cost to maintain it.
Makes sense.
Yeah.
Hey, Matt.
Hey, Matt.
I'm sorry for being late, guys. Believe it or not, I'm actually been busy today. Busy all
I
week.
think it's supposed to say problem solver, not starter.
Oh no, I create problems so that I can then come in and solve them later.
So you're like the government.
Today is like
That's exactly what their policy is.
yeah.
Let's create a problem and then we'll create the solution. Yeah. Mm-hmm.
Well, so now that Beamer showed up, let's just real quick run through. So this week, I mean, there has been a somewhat level of activity, I can say, on our side in the spruce market. But I mean, I heard Greg say it again to a guy. Our motto is be cheap and be busy. I mean, we're throwing orders out there. We're throwing prices out there. Some are sticking, some aren't. Seems that people have a little bit in the last 24 hours on the spruce side and have kind of stuck their heads back in their shell. You know, I will say we did buy from one mill this morning that a month ago wouldn't lower their prices. And now they sold $100 under where their prices were a month ago and they had to sell. Right. And spruce mill, and you're seeing a lot of this, and that's why where the head scratcher is. Matt, what are you seeing on the hem fir side and the Doug fir in the U.S. and the Western side?
I think the rail car business is definitely slower than it was. The truck business is not bad. I mean, whether it's our reload inventories or the mills shipping local trucks into the West Coast, that's been fair to good for all of our inventories. And I think if we had to sum it up for the week, I would say that the honest answer would be we'd like to see some more rail car business. And it's great that we're getting all this truck business because it doesn't really matter how it goes to market, but you ship 4 trucks on one rail car. It just makes your job a lot more efficient when you're shipping rail cars instead of trucks. So prices are weak, but I don't think we're in as bad a situation in the Western hem fir and Doug fir as some of these spruce guys that you're alluding to. I mean, I just feel like there's total capitulation. I'm getting very little pushback every time I make a, $20-$30 counter offer to a sawmill north of the border. They barely fight. They almost never do. So, yeah, I think it's futures driven, right? They're looking at the board just like we are, and we've talked about it. My theory is that the next 2 weeks or so until we get into the first part of December is just be pretty sloppy. The mills have problems, and we have a holiday coming up. So, but then you get into December, and I think a lot of mills are going to probably take 2 or 3 weeks off, and they may or may not even announce it. And I think this will affect a lot of Canadian mills and a lot of yellow pine mills too. So I really believe that this conversation that I'm about to give you is going to occur at a number of different sales offices where the boss man comes in or calls a meeting with his sales staff and says, hey, it's December 1st, December 5th, whatever. You got 2 weeks worth of production to sell for the rest of the month. I don't want you to do anything stupid. Just don't worry about it. We're going to curtail a little bit longer than you'll only have 2 weeks worth of production to sell this month. So let's take the foot off the gas pedal a little bit and keep your order files a little shorter. And then we'll figure out what we're going to do in January. But I've seen this type of situation occur before. Another thing that happens is weather, and so you will see.
That's called climate change, Matt.
Weather. Yeah, you'll see less production either naturally or unnaturally over the next 45 days. And I think that the equation on the buy side is going to change a little bit. You might not get a lot of price appreciation, but you'll definitely get to a point here in a few weeks where it's harder to find the things you want to find. And that's my theory.
I just one thing on that, I hear you, but isn't the inevitable production still there when you just push the clutch in for 2 weeks? I mean, it solves a short-term problem, but as people become wiser in the industry, like, well, hey, you know what? They'll be back on in a month, and it'll all be back, and it'll be the Plato fund.
No, I think you're going to see permanent closures here, dude. I mean,
well, there's a difference between taking 2 weeks off and permanent closures.
You're going to get both. I think you're going to get extended curtailments for the wintertime, holiday time, and I think you're going to see permanent closures across the board. And
I agree with
in
that.
both the United States and in Canada, this is an unsustainable situation. And there's an old saying that things that can't last forever don't. And,
Although this one has felt like it lasted forever, because I feel like we've been the last 3 months of the pod, like we could replay these statements. Like
it feels
but
like
we've had
right?
but we've
I
had
mean,
2 rallies. We've had 2 significant price rallies in the last 3 months, dude. We didn't just go straight down. I mean, we went down in August, we went back up in September, October, went back down again to where we are today.
Yeah.
And so, you know, and there's been, I mean, Charles, there was a rally in Yellow Pine in the middle of all this stuff, right? All we're doing now is just, you know, hey, look, demand isn't good. And people's attitudes this time of year aren't that great either. They're distracted. They have plans and things like that. That, you know, I'm thinking about I'm going to go on a ski trip here with my family. My family's coming home. My son's going to be home from college on Sunday, and my daughter's coming home Saturday. So I'm going to have a full house again. Like, I'm not 100%. And most of us in the business aren't 100% focused on lumber right now because we can afford not to be. Every day you open up and look at futures down 10 or down 8, it tells you can, you know, worry about something else. If futures was up 10, up 15 every day, yeah, people would be a lot more engaged.
We had a rally. We had a $19 rally yesterday.
Yeah, half part of the day.
Yeah, I sold it. That was a nice little gift.
Part of the contracts.
What the good summary, Matt? Charles, Southern Pine, like what's going on Pine? Like, are they going to participate in any closures? What are you hearing? What's going on there?
I mean, inefficient mills are going to be taken off, and I think, you know, there's plans for monstrosities to be built to centralize production, right? I mean, all your Canadian operators, they're looking at the old stuff and trying to figure out a way to get around it and bundle it all together and put together, instead of having 3 or 4 150, 180 million foot mills, they'll build one 350 million foot mill. I mean, there's just lackluster. Everything's lackluster. I mean, you know, there's no sense of urgency, to Matt's point. And, you know, being in a truck market and product is readily available, I mean, you can make a phone call today and it shows up tomorrow. So, I mean, there's really no rush for anything.
Can you bid $50 under print and get stuff done?
No, I mean, I mean, your average mill's break even is about $340, and we're below that. And, you know, you look at your prime links and you look at the Pine contract, and January is at what, 362 right now, and that's underwritten by should be the most liquid, most profitable item a Southern Yellow Pine mill makes.
Yeah.
2 before 16.
Yeah.
And East is the strongest zone. And if you're talking about trading 2 before 16s at $360 in January, I mean, cash today should be 50 under, but they can't afford to sell it there. They're just allocating differently to VMIs and contracts. Is really how they're trying to maneuver around some of the buildups they get.
What's the word on 2026 contracts?
Down.
Yeah,
Particularly OSB.
What's that?
Especially
People are contracting less. I saw, I guess it was in Random Links, in other fast markets, another one of our advertisers. Thank you for your support. But they'd indicated that there was some people that were coming back saying, hey, we're going to reduce and be more open market, which is great, because that gives you so much more like transparency in terms of what's going on, as opposed to, you know, millions and millions of board feet moving with no price discovery.
Yep.
What are you hearing out west, Matt, on contracts? Have we seen any like shift from spruce to U.S. species?
One of my contract customers, I think, is going to go away. I don't think it's because they don't want the contract anymore. I just think that their business plan is kind of blown up on them. And so
It's not about you.
that's a car a week that I think is going to go away. And then I have another contract customer. I don't think they're going to increase or decrease from what they did last year. And then I have one more contract customer that I'm still waiting for answers from. And when I asked them point blank if they thought they were going to increase or decrease the contract situation about a month ago, they said no, they didn't plan on decreasing it or increasing it. So, and their theory was that I think that they're kind of overloaded with all the lumber they have to buy anyhow. And so they just want to have,
Right.
a certain number of contracts to just alleviate the daily cash grind. And so for them, it's more of a logistics question than a price transparency question. And,
What's the
and I
word on
understand
what
that,
home centers
none of these
are doing?
contracts are massive. So,
What's the word on what home centers are doing? Do you have any insight into that?
nothing has changed. Nothing has changed that I'm aware of, for what we're doing. And
Matt Lehman, what are you seeing? Have you got any insight in that?
It's steady. I watch it really just. I watch pressure treated inventories, and you can tell whether they're building them up or they're static or they're declining, and they've been. It looks to me like they're turning smaller volumes more quickly.
Okay.
So Matt Lehman, what's your members feeling out there now, since you're doing some events with them every week? You get feedback on both sides and everywhere in the chain. Like, have you noticed a significant change in people's perception of the market over the last month?
Yeah, I think just like you, Greg, said in the beginning, I think people in the lumber business are not surprised by what's happening as far as demand goes. I think that the shock we have is, like you mentioned, the word you used a minute ago was inevitable. And the solution right now and through the first quarter is less production. Demand is not coming to the rescue. And,
Right.
and I think whether they're temporary curtailments or longer term curtailments, I think the big players, you could take just a couple of 2-3 mills in British Columbia, and for those guys to say we're going to be down for 2 weeks in December, or we're going to be down all of December, and look at their mill lists they've got right now. In the last couple of weeks, they've been huge, and it almost feels like they're running up their log deck just to try to get out of that wood and get in a position where they could just have nobody around but the sales team to sell it for a couple of weeks. But I think we're going to see some people make announcements that at least take them through the first quarter for either hard shuts. I think you probably close the mill for 3 months, could you, Matt, and crank it back up?
You could, you got to, how are you going to pay for labor? I mean, are you going to furlough those guys and pay them to not work for 3 months? Or are you just going to lay them off for 3 months?
Can the Crown do that in British
discussion.
Columbia?
I don't know. I mean, isn't that why they got sued for subsidizing the industry? I mean, you could just say that brings up a political can of worms. I don't know. I don't know the answer to that.
I agree with you, though, there's going to be something significant in the near term that's going to happen that doesn't have to be announced and won't be announced. And it's not in their best interest to pre-announce it anyway.
Well, they're getting smarter on it, right? I think.
So, well, I mean, I don't know. If you're a publicly traded company, there's disclosures that you have to make. If you're private, I agree. There's really no reason to make any kind of announcement because it's a sign of weakness. It's not a sign of strength at this point. Right?
And that's not why the futures moves like 5 hours before an announcement either.
One of the things that has been, really, that I've noticed as of late is the relative competitiveness of Western SPF, the farther east. That, for the longest time, it was like, oh, that never gets east of Chicago. Well, it's competing east of Chicago on a number of products now.
Are you talking about? You're talking like
and it's undercutting Eastern spruce in some of those markets, and competitive with hemp fir.
I think everything is competing with everything.
Matt,
This is the nature of our market right now.
Matt, you mentioned
I'm going to change that from problem solver to guru.
Yeah.
Matt, you
No, I
mentioned
mean, look,
this,
we're in a. What's that, Matt?
that, Matt?
so you mentioned that you're missing your car customers. Are those people like Phoenix, New Mexico, places like that? Are they opting for trucks? Or are they just out of the market or buying something else? Or, I mean, is the market you can
In
sort of
some
look at?
cases, in my truck business that I do by reloading and the stuff I do down in Texas has been really busy since last Thursday, Friday. I've had a real good go of it here the last 4 or 5 trading days. And then my rail car business to the Western markets, that would be Colorado, New Mexico, Texas, Arizona, Nevada, some of the stuff I do back east, all of that carload inquiry that I normally get, I'm just not getting that much of it. Most of the inquiry I'm getting is trucks, and I'm getting a lot of that business, as I just alluded to, but I have to reach out to them with an idea on a car. I'm not getting an inbound inquiry. I have to say, hey, I've got this. I want you to buy this. And then sometimes I do. And sometimes, I've sold several cars today, but it's all me soliciting and saying, I can do this and I can do that. It's not like the normal, a normal week. I would get several car inquiries from just various different markets and then quote them and see what happens. I'm not even getting them this week.
So you have to sell instead of order take.
I'm definitely having to work the phones and being outbound, ears open, eyes open. Trader, when it comes to rail cars, now on the truck business, I've been able to kind of push back. My pricing, I've ignored a lot of the cheap offers that I've received over the last 2 weeks, and I'm glad I did, because I ended up selling a lot higher numbers and a lot more volume on trucks by being patient. And I'm glad I don't have to look back and go, why did I do that? I want to take a bad order now, but I want it to be a bad short. I want to finally lose money on a bad short. I might have taken one today. I took a car today that I'm starting to feel guilty about already. I'm wondering how I'm not going to lose $3,000 on it. Like, what was I thinking? A weak moment, I just said, yes, go ahead and send me that order.
It makes you feel good, doesn't it?
That is the first time since June or July that I've taken an order to buy and been actually nervous about it. So, maybe that's the sign of the bottom. Who knows? But like I keep telling people, I'd love to be wrong on futures. Like Greg says, I'd like to lose some money on futures.
Well, just so real quick,
then my inventory would be worth a lot more.
Real quick, let's talk about futures expiration in November, where January is going, and then I wanted to kind of switch over. Matt and I talked on the way in about the big surprise is going to be, as both Matt said here, production coming off to a point where all of a sudden you get a rally in the first quarter and nobody's ready for that, because as much as we anticipate that happening, nobody buys until somebody goes before them, right? And so, Greg, what did you read into the November expiration and where we're at in January right now?
What I read into it is what we've been saying, which is I'm continually impressed with the mill's desire to produce substantial losses. So when we think about November expired at 508, that's for 390. What is that? $396 FOB mill, huh?
Yeah, somewhere around there.
Whatever, 390, yeah, 398, whatever. With a 45 to 50%, duties, tariffs, all that. It's those. We've been saying numbers are unsustainable. I kind of jumped up on the table last week and said that if you're an end user, if you're a multifamily, if you're anybody that has the ability to pay for and store lumber, that lumber that you buy, over the next several weeks is going to be a good investment in 2026. I'm going to continue to stand by that. And Matt Beamer laid out a really kind of plausible scenario. I mean, seasonally, prices are higher in the first quarter than in the fourth quarter. That's right, 10 out of 10 years they're higher. Now, that's actually not right. It's only 8 or 9 out of 10 years, because there's been a few years where the high of the year was at the end of the year. But so yeah, no, I'm going to stick with that. People should be making that investment, and it's hard to do that, and then 2 days later realize that you can buy $10, $20, $30 the same items at a lower price. That gets really hard to do. I told the guy this morning, I said, you know what?
So
I go ahead, Ash. I'm rambling.
no, I was going to say, so if I picked multifamily,
Charles is still giving me the look.
That's a perfect example. If you were advising somebody at the end use of a multifamily, somebody that's got to call the lumber supplier to buy the lumber, not relying on, somebody telling them, they're listening to this podcast for the first time. They usually just give them a dollar amount and their lumber guys buy for them. They don't really know what the price of lumber is. I mean, it's really low right now.
Most people exist that don't know what the price of lumber is.
Yeah, and they usually,
really?
Yeah, they do. They do. So for H1 of 2026, for jobs that are sold on the multifamily side, Southern yellow pine, spruce, hemfir, 9-footers are a big item. What's the recommendation? What would you, if you were advising them right now, and we're not
buy.
What would you advise people to do for H1 of next? I'll go first. My advice is, I heard some cheap numbers getting thrown out from our customers of what people had offered them for Q1 of next year on certain items like 2x4, 104, and 5/8, like a 475 delivered to the Midwest. This isn't a recommendation because we don't, we don't do that. But if it was me,
we have a disclaimer at the end.
If it was me, okay, you should make people, if they want to do something that doesn't make sense, make them do it. And
100%.
And if somebody comes to you right now and offers you something, they're going to offer it because they're just throwing shit at the wall. Make them take some of that stuff, even if it's a light amount. Make them take it and make them dock it up what it is. If they're going to sell you that,
problem is 9 out of 10 of those conversations end up just freezing people.
That's fine. That's fine. But
the indecision,
like if somebody's going to offer you something for the first quarter below what you think it's worth, in my opinion, you should really take a look at that.
I would have told them. I would have told them to take delivery or tie everything to the November contract and then sell January and March against it.
Yeah.
Because we went off the board with like a $70 premium. Yeah. And I mean, we talked about it last week or the week before. I mean, in my life, if I could get $70 on a basis trade,
well,
wow. Thank you.
Charles, what are you going to tell? What would you tell people for H1 2026? Like if they're all circling the wagons, looking at stuff, are they throwing numbers at you on anything right now? Is anybody willing to put numbers on stuff?
Yeah, I mean, people are willing. We have an uncanny ability for people to give us numbers. Now, are we happy with them? No, but you can have a conversation. You can justify premiums based on the facts that are out there in this industry, right? What the conversations I've been having is, if you know you're going to need it, buy it. And if you have to take delivery by March, do it, because as you get further into the year, it's only going to get more expensive because of some of the things that Matt Beamer laid out.
Well, right? I'm curious. Yeah. So that leads me to a question for you specifically, since you're in the yellow pine game. Do you have any fear as a seller about locking in prices over the next 3 to 6 months? And it sounds like you kind of do. Can you expand on that if you do or don't?
I mean, I don't, as long as the premiums are there. I mean, as long as you have risk adjusted premiums that make sense and Desto's work, I mean, I'm not scared to sell forward.
But
I want Central Florida at today's cash -5 because it's all going to go to hell in a handbasket, and that's where I need to be. Well, the problem with that is you've had people, just like Ash said about the 475 delivered Midwest. You've had people that are in my niche that have tried to push those numbers, and they have orders for Q2 at those levels, and it's not 10 trucks, it's like 70. And I mean, there's good business and there's dumb business. And I think accountability in this industry really needs to take hold, especially when people are willing to muddy the waters in the way that they are.
so you don't want dumb business, is what you're saying.
My customers don't want me to have dumb business either, because it's a partnership. They want the damn thing to show up, because they know if they have 50 framers, and they know they're going to have 50 framers, because every job that we've shipped over the past 6 months started with 20, and they end up with 50, and the ship schedule ends up getting shrunk by 45 days, and everything ships in the front 60. So if it doesn't show up, you have an even bigger problem, and people are really starting to understand the cost of that.
Yeah.
But once again, we have an uncanny ability to execute.
That's a good
and
point.
create credibility.
Matt Lehman, what are your members telling you? Are they locking anything in? The people that have jobs for the first half of the year?
I'm 3 weeks off sides because I've been recommending cover it all now for 3 weeks in a row. And my recommendation is, if you hadn't done it by now, you got to get on it. Because, I mean, if anybody has a job, did they bid any sooner than 30 days out? They got money in it. And they're making money that over the last 2 weeks by not buying it. But I think if you're sitting on anything, or you get anything in the next 30 days or 2 weeks, you got to cover it as soon as you get it.
Yeah, and Matt Beamer, I think that was a great question to Charles. And Charles, the way you answered it, I liked it. Like, risk adjusted though, just so listeners listen. Like, if you're looking at 2x4 number 2 pine, like delivered Central Florida, your stuff for the first quarter is probably like $100 over print right now, right? Or I mean, when you're talking risk adjusted,
you can buy January at 362 right now. I mean,
but the board's not going to deliver it when you need it. That's the problem.
Yeah, but I mean, it's going to manage.
That's a good.
No, it doesn't. I mean, it's a mechanism that we historically haven't had that manages some of that risk. 100%.
I mean, to your point, you know what? You could probably, you'd probably have to bid that up $20 or $30 to get the volume of the trucks that you want anyhow.
Yep.
And then, you adjust for that, blah, blah, blah. Right. So, I mean, yeah.
That's a good point. A good point. So,
Ash, I think
we're looking to get volume in this pine contract. I mean, Charles, should I be buying January pine at 362, 365? Is that a value for me?
Let's buy some.
Value.
Let's buy some.
I have a question.
Buy it then. Charles said to buy it. I'm buying it.
Kind of circling back to what you originally asked me 20 minutes ago. And then I said my theory was that the Canadians and the yellow pine guys were going to take some extended time off. Along that same thought process, Greg, what does the Euro first quarter biz coming in look like to you?
I say current run rate is probably somewhere, depending on your port, 25 to 40% below first half of the year. And, between holidays and the normal slowdown, it's only going to be, less than that in the first quarter of next year. I mean, I think it's going to continue to be less at these kind of prices. I mean, it's just they're, if they're saying they need somewhere between, 600 and 750, and the current numbers just don't make sense.
Yeah, no, yeah, that makes sense. Did you get that? Did you get that pine bought yet, Greg?
I have. I'm low in January, honestly.
One thing I want to just
practice what I preach.
All right,
we'll go.
Y'all be good.
I'm buying it in my personal account, not my Sitka account. Ash.
So, question: Where do we think our customers are right now, or customers all along the different nodes. I can tell. It's
Node.
from chains to independents to trust plants to different regions of the U.S. adjusted for where the current business is. Where do you think their inventories are at relative to where they normally are this time of year?
Lower.
I think much
I
lower.
think a lot of my customers are running lower inventories, but there's a couple of guys that I talked to where they're kind of choking on contracts.
Mm-hmm.
And so, maybe they over contracted for 2025 for strategic reasons. And now their business has slowed down to the point where, it's wintertime and they're just digesting contracts every week. But I'd say like 80% of my customers are carrying a lighter, for sure, a lighter inventory than normal.
Yeah, right on. And I think from what Greg and I see, and from the way certain customers follow up on trucks, that's got to be the feeling. Also, agree with that.
Yeah, I think people started out probably November really bullish on the seasonal aspects of what the market could do, got it along, and I think they've leaned that position back once the realization set in and things aren't going as well as they thought. But I don't think people have continued to build a long position. If anything, they're liquidating.
And look, I get it. I understand it too. I know why they're doing it. Matt Lehman, you and I had a conversation today too. Like, what's overvalued and what's undervalued? Well, everybody said everything except 2x4 still is keeping some good relative strength. But I'll tell you, I told Matt and Matt Beamer. I mean, Greg, maybe everybody wants to buy 16 foot and everything, 2x10, 2x8, 2x
yeah.
And can't give away 2x6 14s, even if we're selling them below pencil trim 12-foot prices. Everybody.
No, I gave some away. I gave some away. I did.
I thought you got a good order though. I'm like, it was good, but it's like everybody wants 16. So yeah, there is some relative strength in some other things, but as Matt pointed out, most of the production out there is still 4-inch, right? And 6-inch, that 6-inch spread that we talked about is kind of plodding along like we thought. 6 inches definitely holding in there while 4 inches is collapsing on top of it.
Yeah, I think 6 inches definitely improved.
Yep.
And not just in relation to 2x4 coming down, but I think 6-inch on its own has improved the last 90 days, significantly, other than maybe 14.
Is there more demand for 6-inch for insulation purposes, or what's the kind of infatuation with it, you think?
I just think that there was a lot of 2x6 around through the summer, and there is too much of a buildup at the mill level, whether it was yellow pine, hemfir, Doug fir, or spruce. There was just a lot of it. And now there's not near as much because all these optimizers have switched over to 2x4. And so now there's more 2x4 and less 2x6. And then, demand is about the same. It's just that
they're making 2x8.
Yeah, the imbalance is really comes at the production side. So it's like, why does the price of 2x12 green Doug fir 22s and 24s ever go down? It's a total niche thing, right?
Yeah.
Well, if somebody like us makes, 600 units of 22s and 24s because our optimizer said it's worth, $600, $700 mil, the price isn't going to be that anymore if you just overproduce it. And I think really a lot of these relative value and basis ideas that we come up with really have a lot more to do with what have the mills been making.
Yeah.
No, not what are they going to make.
Yeah.
And our job is to identify what are they going to make and then buy the things that they might not be making as much of in the future, like 2x6 14s that are at like historical low relative value. So,
well, I mean, there's two things that affect relative value of products within a species group. One is the production, the log diets at that particular time, and those can react a little more quickly. The other is a structural change in demand, and that's the one. When you have that happen, the market is a real lag in catching up with it, and that's what changes those relative values more substantially. But I mean, in the short to intermediate term, it's always, production trumps everything.
Mm-hmm.
So
Yeah. So it's going to be interesting to see where production goes the next 2 months, because it sounds like there's less euro coming. We all sort of believe that this is unsustainable in terms of what the mills are realizing, whether it's US or Canadian mills. We're looking at futures charts that are not very happy. And we don't expect the demand to come to the rescue. So it's going to be fascinating to see how this all unwinds over the next 60 days. I'm actually
kind of exciting.
kind of excited about it. Yeah.
Matt Lehman, tell us a little bit. What do you have coming up at your company, and what should people do to sign up and join? And what do you have exciting going on?
Holidays.
Yeah.
It's kind of hard. It's kind of hard to get anybody excited about doing anything in March. So we're still doing 1 month free trials for those that are interested in really not doing a whole lot of marketing push, but it's kind of like, I'm just grateful to hang on to what we have.
I don't want to put you on the spot, Matt, but I mean, you are an advertiser, and I've heard the ad. The guy that puts it together, a real professional, and I mean, it really comes across very, very good. I'd like to, and this is maybe a testimonial for folks out there that, might be thinking of like, hey, is it worth being on the #1 podcast in the lumber and building material space? What would you say to them?
I'll let you know this afternoon. Tomorrow afternoon after you get it published.
Oh, God.
No, it is.
That's
It
awesome.
is. In all seriousness, no, that I really support what you guys are doing. I think it's an invaluable, self-giving effort on all your part. You make a lot of information available to somebody who could just tune in for an hour, and you can always be up to date on what's going on in the lumber market if you just listen to this podcast every week, because you just cover so much. A lot of people don't buy lumber every week, and you kind of without having to call 30 brokers and figure out what they're going to try to sell you just get the straight skinny from you guys.
I feel bad I didn't really give everybody like a rant this week, but I'll save up for the next time.
Yeah,
we got a great guest coming on in 2 weeks. We're off for the holiday next week.
Yeah.
So hey, Matt Beamer, really enjoy your time with the family. I mean, when the kids coming back from college, what a great time that is.
Yep.
And it's awesome. And then Matt Lehman, we appreciate your support. That's for sure.
Appreciate what you guys are doing. Keep it up.
All right, guys. Have a good day.
You guys have a good holiday.
Cheers.